Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right. Not a ton for us to get into today, but as we kick things off, let's recap what happened this week in the markets.
Yeah, if we start on the cattle side this week, live cattle basically unchanged again this week, right around $1.20. Those feeder cattle markets were steady to $3 higher this week. On the futures side, the June live cattle futures contract closed down $1.80, and the August feeder cattle contract closed down nearly $3 this week. Choice box beef continued to increase this week, up $6.30 for the week. On the hog side, cash barrel and gilt prices were up nearly $3 this week. The June lean hog futures contract also up about $2.65 on the week. The pork cutout value also gained this week, up nearly $7.
Let's talk a little bit about we've seen kind of a pullback in cash hog prices. Is this to be expected? How much are we as we're watching processor or packers and processors are watching what's going on with supplies? How is that all kind of tied in together? Because we've seen so many days and weeks of consistently higher prices.
Yeah. Well, so I go, when we're at these lofty levels, I certainly always say there's more downside risk than upside potential. To me, the process here is a lot more of just, can demand continue to be as strong as it's been of late? And that's both, I think, domestic and international demand. You know, it caught my attention that we're talking about loin prices that are now roughly near $1.20. It's been some strong demand for maybe things that in the past have struggled more. So if that demand stays with us, you know, maybe these prices are what we see for a period of time. I think we're going to quickly start to look at the next hogs and pigs report coming up here soon, and a lot of question about effects of things like PRRS, and then just what sow inventory really looks like.
Definitely will be plenty for us to talk about in the coming weeks as we get closer and closer to that report. Weekly slaughter numbers, as we take a look at those, a little bit of a slowdown, what we've seen in the last couple of weeks.
Yeah, that's right. I don't know if we're looking at a weekend that's kind of slowed us down here with Memorial Day weekend, but for cattle for the week ending May 29th, 629,000 head of cattle slaughtered this week. That's down 40,000 from a week ago. That's still 102,000 above a year ago when we were still dealing with COVID-19 slowdowns. Cattle slaughter year to date, 6.8% higher. On the hog side, a run of 2.378 million head for this week. That's down 15,000 head from where we were a week ago. 397,000 head above where we were a year ago. And hog slaughter, 2.8% higher year to date, as we said here.
The big report this week, cold storage, and I think the one takeaway from this report is supplies are getting tighter.
They are getting tighter. The story of we've got less of everything sitting in the freezer right now. Again, to me, a testament of what's been pretty strong demand. We start on the pork side here. April 21 pork cold storage inventories were down 26%. Your favorite belly supplies were still extremely tight, down 58% from a year ago. On the chicken side, I've had a little bit of chicken conversation, but chicken ending stocks down 22% relative to a year ago. Wings down 33%, for example. Now, the one that's big here is thigh meat down 53%. So a lot of categories. Now, beef in cold storage also down 5%. Relative to where we were a year ago. So tight stocks certainly came out of that cold storage report.
I'm getting more nervous about the tight chicken wing supply than I am about the bacon supply at this point. But as we talk about that, how much of that is labor issues?
Yeah, so I do think we have some of that in processors that have been slowed. Some categories, tough to have enough labor to do the value added that comes with some of those categories as well. To me, that's a big part of the story that we have here, of just enough labor to keep current plants operating efficiently, in terms of, again, all that value added, all that cut up of products, I think is catching up in some of the data that we see here. And I'm not sure we get that fixed anytime soon, Megan, to be honest. I think labor shortage will just continue to stay with us for a period of time. And, for those that might say we need to build another cattle slaughter plant, I think there's more to the story than just building the plant. We have to have the labor to run any kind of additional capacity. And that might be tougher than building the plant these days, by the way.
My other question is, how much are rising prices playing a role in impacting that as well?
I think as well, when you have folks who might be thinking about holding stocks, the last thing they want to do is buy stocks when prices are high and sell those stocks when prices are low. So there's a lot of folks willing to run a lot closer or a lot leaner in terms of ending stocks of these products, maybe anticipating some lower prices moving ahead, and don't want to get caught with a lot of expensive stocks on hand if prices were to fall.
All right, Restaurant Performance Index also out this week, and continued recovery, I will call it, as we see those numbers.
Yeah, if we look at the overall index for April of 21, it came in at 106.3. This is another one of those where we want to be careful because of just how tough 2020 was. So it's hard to compare relative to the previous year. However, relative to where it was in March of 21, it's 1.1% above that year ago level. So, sorry, below that month ago level. So I think that's positive. As I look at the data, expectations are probably something we can be looking at. Those look to be stronger as well. So a lot of folks expecting continued growth in the restaurant side for the coming months here of 2021.
I think the other thing we got to talk about this week is a little bit of trade as we look at those numbers. Let's talk a little bit about how things are looking as we look ahead to the rest of the year.
So I think just like we've talked about domestic demand being stronger, which, by the way, ERS, as they released this update for ag trade, suggested U.S. real GDP for this year is raised to 5.8% growth. Their previous estimate back in February was for 4% growth. That's good news. That has to do with domestic demand. Now, to the rest of the world, they expect the dollar to depreciate by 2.4% in 2021, making our products cheaper to the rest of the world. And as such, we see a lot of increase in trade or in exports relative to where they were earlier. Total U.S. ag exports, 164 billion is that current estimate. That's up $7 billion from where they were in February. On the livestock side, livestock, poultry, and dairy, 34.2 billion, 1.6 billion higher. That's broken up between all of them. So beef up 200 million, pork up 400 million, poultry up 200 million. So that's a more positive outlook on the trade side as well. So demand looks good, as I think, again, a lot of these other countries are also coming out of some of the worst of COVID-19.
Do we get nervous about being able to export? We talk a lot about what's going on with the West Coast port situations. How does that potentially put a hiccup in this really positive outlook for trade for the rest of the year?
Well, so I think, that's maybe the downside of it's the increased cost of transportation that we're dealing with. So although there's a lot of interest in moving products, and yes, our dollar is cheaper, the cost of moving those products internationally has been going up, as, again, I think labor is an issue there, as well as, frankly, just capacity, right? We're seeing so much strength in a lot of products. It creates some other capacity bottlenecks in getting meat exports out to the rest of the world. So all those things could, come to bear in terms of maybe taking a little bit of shine off that, but all else equal, I think there's pretty strong demand out there.
Scott, that'll do it for us this week as we look ahead to next week, a pretty quiet week for us.
That's right. We just get a jobs report at the end of next week, and otherwise pretty quiet.
All right. Well, I'll make sure I have a little few curveballs thrown in there and ready for you. And if you have questions, feel free to submit those as well. You can go to brownfieldagnews.com. And this fall, or this spring, I guess we're in the spring, I am.
It's almost summer.
Stop. It's still spring. I have another month. I apologize. It's a madhouse here today. I have 2 sick kids home. So it's a little bit wild circus in this household. While you're in the tractor or on the road in this spring, feel free to check out all the fantastic podcasts that Brownfield offers. Those are at brownfieldagnewscom/podcast. Scott, have a great weekend. Have a happy Memorial Day weekend. We appreciate you and your time with us as well.
Thanks, Megan.
See you next Friday. I'm Megan Grebner for Brownfield.